What's going on, everybody? Jeremy Ritz, Courage Pays Better Than Fear Trading. I got the NVIDIA hat on today as the market pushes into new all-time highs. NVIDIA made a new all-time high today off of the momentum from Taiwan Semiconductors on their earnings. And I'm here for a brand new episode of the Traders Podcast, number 35. Very excited to be here with all of you today. And the topic for today's show is going to be all about lazy trading analysis. And I'll get into this here in a second, but basically it's when we just look at a chart and without doing the deep dive, without understanding what's happening in the broader economy, the global economy, what's happening in the data, just making an assumption based off of that chart and saying, oh, this is what's going to happen. It's going to come down or it's going to pop higher. And so we're going to talk about the difference between lazy analysis and thoughtful analysis and how that can transform your trading. And so very excited to get into all of that with you here today. And before we do that, I just want to remind everyone about Profit Pioneers, the new free course that I will be starting on October 29th. I'm very excited about this class. It's completely free, so I encourage you to register. The registration link is in the show notes, so be sure to click on that and sign up. And essentially what this course is all about, it's 7 sessions, is I'm going to teach you a process, a system for strengthening your trading skills and abilities. And basically the way this works is I'm going to show you what this process is. I'm going to show you how to practice your trades. Essentially what we're doing is back testing or back trading, whatever you want to call it. And I'll be modeling trades for you. I'll be setting up trades, showing you how I control my risk, doing actual trades. Obviously, it's with historical data, and then keeping track of what the P&L is on those trades. And this process is something that you can take and apply to your trading to help yourself improve. So sign up for that, Profit Pioneers. If you've completed one of my boot camps, this would be the next step in your trading journey. So would love to see you there October 29th. And then I have another course that the members of the Courage community know all about it. The name, don't tell anybody yet, but that will be announced here sometime soon. I'm very excited about that. That one is not free. But more information on that's a secret one, and I'm pumped about this one. So be on the lookout for that. And so with that said, let's just do a little quick update of what's been transpiring in the markets. Obviously, we're running to new all-time highs. Things keep pushing. And interestingly enough, October is typically a bearish month when you're in election season, but that hasn't been the case here for the markets as we just keep continuing to grind higher. And, a lot of this is attributed to some solid data coming through, inflation data, employment data. We had the rate cuts. Earnings have been solid. And so how much longer can this last? Who knows? We all try to predict this and get a feel for where things are. But the key for me and how I'm playing this is I'm trying to be, and you've heard me say this on the show before, is to be in cash as much as possible by the time we get to the election, which is coming up, I believe, November 5th or 6th. And really, I'm not taking on any new swing trades at this time unless there's something at a good value area. And all my day trades are quick, in and out, lock in the profit, move on. So that's really how I've been playing things. But being up around these all-time highs, the SPX hit an all-time high. The DIA hit a new all-time high. Bitcoin is pushing higher. It has not hit a new all-time high, so you still have that hanging out there. You have IWM, which has not hit a new all-time high, and you also have the Qs. And so I think once we see those three start to make pushes and get into those all-time high areas, then we could see meaningful correction. And really, what I'm looking for, and it hasn't happened. I mean, we had those really decent pullbacks back in August and at the beginning of September. it looks like they're gonna run this thing up into the election. And so at that point, I will be in cash so that if we do get a meaningful correction, then I'm able to deploy it and play some things long term. And as of right now, just looking at how things have played out since we bottomed out in that bear market October of 2022, what I will be anticipating and looking for in 2025, probably around April or May, will be the start of a 20 to 25% correction pullback, to just reset things to then start the next leg up. Doesn't mean that it's going to happen, but that's what I'm looking for. That's what I'm anticipating. And yeah, I mean, we've got all the big tech earnings coming up. We've got Tesla reporting next week. We have Netflix who will actually report at market close today. And then you have your other big boys like Google, Apple, Microsoft, all those coming up. So I think those are going to be positive earnings reports. And so my take is we'll probably continue to push higher, hit that new all-time high on the Qs, see more of a rotation in IWM, which typically runs November into December. And yeah, so we're bullish on the markets, and that's where we are. All right, so let's talk about lazy analysis versus thoughtful analysis. And I'm going to show two charts here. There they are on the screen. You can see them. I just want you to take a good look at this. Okay. We see one is a picture of the current SPX, and you can see that it's up at all-time highs, right? And then this other chart, this is a ticker that is down near the bottom, right? It is beat up. And the reason why I'm showing these two charts is typically, especially now in the markets, because things are pushing higher and we're in all-time highs, there is a quick move or rush to say, oh, we're at all-time highs, we're coming down the bear market, things are too extended, we're at valuations never seen since the dot-com bubble back in the 2000s. Yeah, everything's bearish, blah, 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 blah. That is lazy analysis. Lazy, right? Just because something is extended and is up near all-time highs and is stretched does not mean that it's automatically going to come down and things are going to crash, right? It doesn't work out that way. And sure, there's a chance, there's a probability. I'm a big believer in probabilities. It's a huge part of my trading. And we have to be prepared for a move like that when we see something extended very far to the upside. But that doesn't mean that it's going to happen. It's not a guaranteed. And a lot of times what will occur is people will get married to these biases and say, oh, we're too extended, we can't go any higher, I'm looking bearish. And they keep trying to short. They keep trying to short. They keep trying to short. And it just keeps running higher and they're losing money. That's why you cannot be completely locked in or devoted to one side in the markets, because things can keep running even though you think that a pullback is due. And a pullback can very well be due, and the probabilities could point to that. But the market doesn't care about your analysis, and it's going to do whatever it wants to do. And there's a saying out there, and I probably said it on the show before, but the markets can remain irrational longer than you can remain solvent, which basically means is the markets can do whatever the hell they want irrationally longer than you can hold on to your cash, right? And so when we look at the SPX right now, it is extended. We are at new all-time highs. And sure, a pullback is needed. But that doesn't mean that it's going to come right away. And lazy analysis is just saying, oh, it's extended, we're going to pull back. No. What else is occurring in the economic landscape? What else is occurring in terms of earnings reports? What are companies talking about in terms of forward growth? What do they see transpiring over the next several quarters into 2025, 2026? What are they forecasting for their revenues, their profits? What new products are coming? What trends are they seeing in the economy and the consumer? What is happening in a particular sector? right? Do we see an increase in value in a particular sector? We talked about the chips at the start of this episode, or healthcare, or what have you. All those things need to be taken into consideration when doing your analysis of the charts. And not only that, but also going back in time, going back in history. So if we're talking about the SPX, going back and looking at when it was at all-time highs before, how did it typically respond or behave? And have we seen times where it's pushed up high like this and continued to go? And one of the things that I'll point to is if you go back to 2020 after the COVID crash, and then it rebounded very, very quickly, hit new all-time highs. And from there, from the previous all-time highs in 2019, it ran 42% higher, right? If you just take that general logic and that framework there and apply it to where we are, to when we made the all-time high on the SPX, compared to I believe it was January 2022 or 21, we haven't hit 42% of a gain yet. And in fact, I believe that would take us up near something crazy like 6,200. So again, don't fall into the trap of doing lazy analysis to say, oh, it's going to go down, it's going to come down. How many people have been saying that about NVIDIA? All right. I've got the hat on, but that thing doesn't care. It just keeps running and running and running. Okay. So you have to be thoughtful and have due diligence in your analysis. You have to understand all the different parts that are at work here and not just say, oh, the chart says this is what's going to happen. No, you've got to understand what the bigger picture is and how that stock fits into that bigger picture. And the other picture I showed you, the chart that was way down at the bottom, a lot of people will just automatically say, oh, it's down at support. It's going to bounce. It's going to run. I'm going to throw all my money into it. Well, you don't want to throw your money at garbage, right? So you have to do thoughtful analysis too. When you see something in a value area, it's not just, oh, because it's at a support or it's at, historical lows or it's at a support from 10 years ago that it should bounce here. No, you have to study the company. Is it a good company? Is there good forward growth? What's happening with them? Because a lot of times people are expecting a bounce, but it turns out the company is dog shit, right? And is probably going to drop down to levels that you weren't anticipating. And so the whole purpose of this episode is just to remind you that you need to make sure that your analysis of the charts is thoughtful, is intensive, does consider all the evidence, does consider the broader markets, does consider the economy. And if you're making an investment in a company and you haven't read their earnings report, their last earnings report, or at least glanced through it or scanned it, and you're making investments in that company, then let this be a note to you here. Start reading those things and see, hey, is this me putting my money here? Is this justified? Is there good forward guidance here? Is there growth potential? Rather than just looking at the chart and saying, all right, I'm going to invest here. Now, for trading, it's a little bit different. But if you're investing in a company, you need to know what that company is going to do long term or what their prospects are. Okay. So again, if you are going to invest long term, if you're going to swing trade, if you're going to day trade, don't just do lazy analysis. Don't just look at a stock and say, oh, it's extended, it's coming down, or hey, it's near support, it's going to bounce. No, it's deeper than that. And the best traders are constantly learning. And that's probably why I like trading so much, is my education background is you have to study this stuff. You have to like to read, to research, to forecast. And a lot goes into that. It's not just, oh, hey, let me look at the chart. This is what's going to happen. No. The takeaway here, put in the time, study, learn, and apply what you've learned, what you picked up, what you've garnered from your research, and see how that impacts your trading. And remember, just because you're at an all-time high doesn't mean that it can't keep running, because it can. And just go back and look at the charts of the stocks that you trade. You'll see that it can happen, right? And the other part is true as well. Just because something's down big time and it's down at a support doesn't mean it's not going to drop any farther. because it can happen. All right. So no more lazy analysis. Put the time in, be thoughtful, and see how that impacts your trade. Now let's take a look at Mr. Roku. Oh, I need the glasses. Here we go. Let's throw these suckers on. Oh. All right, everybody. So here is Roku. Let's just zoom out and see where things are on Mr. Roku. You can see I still have that $100 target on this ticker by the end of October. We'll see if we're going to hit it. And you could see this thing, and talking about lazy analysis for the longest of time, it's support at support at support. And we thought, hey, the bounce is coming in. But again, it doesn't always work out that way. We finally hit the bottom back here on August 5th. That was whenever we had the flash crash. And you can see since then, it's just been pushing higher. And really, this thing has just been kind of moving within a range, moving sideways since, let's see here, September 12th to where we are today, October 17th. Really, this has just been range bound. And what I think this is waiting for is the earnings report that's going to be on October 30th. And as you can see, there is not much in the way until you get up here to the 200 SMA on the weekly. Let me make sure that's accurate. I actually have to pull this down a little bit. So this has come a little bit lower to 149.28. But what I think is going to happen here is we're going to get a gap up on earnings. We'll fill this gap and then we'll grind higher, right? And we have this channel drawn on here. So the top of this channel would be a resistance point. If it breaks through that, then that 200 on the weekly is a real possibility. And the other thing to take a look at here too is just if we take a look at the volume profile, and let's make these candles a little bigger. And this is going to have to adjust. But you could see that there's a nice collection of volume right where Roku is sitting right now. And it's going to be hard for the bears to push this thing back down. If they do, then back down to $69 it would come, because you could see it's pretty thin through here. But this is sitting on good support, and there should be an opportunity for this to launch higher. But what we have to wait for, and I'll mark it here with a line, is earnings. We've got about 2 weeks to go before we get it. And that's really that should be the big day. That should be where this gap gets filled. And just to point out to you guys, last fall, whenever Roku reported earnings, and the earnings report was November 1st, so we're going to be a little early here this year. You could see it gapped up and went up a total of $19.43 from the close to the day of earnings, right? So if we just apply that over here, let's just assume that we're going to be in this range here. And we'll take this candle for example here. Let's say we close here. Where would 1943 take us? I'm going to have to make this smaller. 1943 would take us to 97.01, which would more than fill that gap and put us at this resistance here. So we'll have to see. Let's actually put a little mark there for 1941, and let's see if we get that. What did I say that was? 94.73. Nah, I got to do this again. Hang on. 1941. All right, 1942. So 97.16. Let's just put one right there. And we'll put possible. Let me add some text to this. Possible earnings target. Now, remember, I said 100, so there's a chance I could be wrong, so we better take that out. But we'll see how that plays out. But that's Mr. Roku for you guys here. And that's going to do it for episode number 35 of the Traders Podcast. I'm your grateful and appreciative host, Jeremy Ritz, thanking you so much for joining me here today to learn about the difference between thoughtful and lazy analysis. Put in that time, do the work so that you can profit from this beautiful thing that we call the stock market. If there is something that you want to be covered on an upcoming episode, please let me know in the comments. Reach out to me, couragepaysbetter@gmail.com. I would love to make that happen for you here on the show. And don't forget to sign up for Profit Pioneers. And if you're looking to learn how to trade, if you're looking for a coach, reach out to me. I work with hundreds of clients. I would love to have you be a part of that. And with that said, I'm going to sign off here, episode 35. I will see you next time for episode 36 of the Traders Podcast. Take care, everybody.